Welcome back to Ask Dad. On today's video, we are reviewing a real estate investing platform called Ark7. This is a fractional share type investing situation where you can go in and buy fractional shares of real estate. You can do it for, I've seen as little as $24 on some of the shares, and then you are a real estate owner. There's good and there's bad to this platform. Before we jump in though, I do need to make sure I specify that this is not investing advice. This is my experience with this real estate platform. I am not making recommendations one way or another. Any investments that you make, you should research heavily, make sure you fully understand what you're getting into, and don't take anyone's word for it other than what you're able to learn. If you need help, please do bring in a registered financial advisor for what's best for your scenario. So let's go ahead and jump in. Ark7, as I mentioned, is a platform that allows you to invest into rental homes share by share. I've seen them go as low as $24, as I mentioned. You can buy long-term, mid-term, and short-term rentals, and they'll explain to you how they view all of those. But I'm just going to go through and show you what I have seen so far. So again, go to ark7.com. This is the homepage that comes up. You have to create your own account to view most of it, but you can browse properties and view some different things without really putting too much information in. Once you create your account, however, you'll be able to see the properties that they have offered. And if you go up, they've got several tabs: home, portfolio, and marketplace. We're on marketplace right now. You can see all of the different properties that they currently have offered. It'll show you a map over here. Mine is stuck on the Dallas-Fort Worth area currently, and this is one of their properties that they have in that location. But as you scroll through, you can see that they have different types of properties. And then one of the things that I do like about Ark is they have a marketplace that after you have owned a property for 3 months and after they have sold out all of the shares, when the shares do seem to sell fairly quickly, you can relist your shares for sale on the marketplace. So after, I believe there is a minimum 3-month hold period and the property has to be completely sold out. Then you are able to trade your shares. So you're not stuck in the property for 8 years, 5 years, 3 years, however long their hold period is. That is kind of a cool feature here, and it can work in a number of different ways. For example, it can allow you to liquidate your shares and regain your capital if for some reason you need to get that money back. It can also potentially offer you a way to buy properties potentially at a discount. Where real estate is normally a very slow moving investment, in a platform such as this, it allows you to be able to buy and sell shares that otherwise would not be liquid. If there's market events that have people nervous about real estate, or if they're scared about a particular market, they may be selling their shares at a below market rate, which offers you an opportunity also to make money on the buy side. Meaning that when you buy at a discount, at a later date you'd be able to sell higher. And that's more like a stock market transaction instead of a real estate transaction when the property itself is not being sold. So the other thing that I have seen with this, let's just click into one of these properties. Let's take this Atlanta T4 property here at the top. It's currently, the bid is $22.50, the ask is $23, so there's a 50-cent spread there. Either the buyer or the seller is going to have to give if they want those shares to trade. But what I do like is it shows you just some basic stats. It tells you that they expect the annual level of distribution to be 3.08%. And they pay that monthly generally. The market cap, which would be the value of the property based on the shares that are trading, is $331,250. The current rent for that property is $15.50, and the last trade for the shares was $25. So you can see this: the last trade at $25, the current bid and ask are below that, so the property value is trending down somewhat for an Atlanta property. Clicking into this property, let's just take a look at the details that Ark provides at this time. They provide a good photo set. The photos seem to be high quality. You can scroll through, see how this property looks. Something that I have noticed on a lot of the Ark properties is they do look very well. In this particular property, it looks like it is furnished. However, I do believe this is a long-term rental, so the property may have been staged. In fact, it probably was staged. However, it looks like they left some of what people call TikTok lights on the wall, so they must have taken these pictures with a tenant in there, would be my guess, because no staging person is going to run those type of lights. At least I would hope not. Outside of the photos, let's get back into the property itself. You can see you have some additional details here. In this particular one, the market capitalization or the value of the property based on what people are currently paying for shares is $331,250. There are 1,070 investors in this property. Doing some simple math, let's see what that looks like. 331,250 divided by 1,070. That means an average investor holds $309.58 basically. So that's a lot of investors. The property is in the Sun Belt region. We know Atlanta is down there, of course. The reasons they like this property, and this is something I do like about ARK, is they give you different reasons why they like it. Now, this is not investing advice per se. You would want to take a look at the market closer yourself, but this does tell you certain particulars about the property. It's near major employers, close to major highways. It's new construction. New construction is great because that means you should have less things to fix other than things tenants damage, but you're not going to be as worried about the plumbing, about the roof, about the siding or things like that. Favorable rental policy, I'm assuming, I'm reading between the lines here, but I'm assuming this means it's favorable to landlords. That means that you don't have to wait 6, 8, 12 months to get someone out if they're not paying rent, or if they're doing damage to the property, or if they get pets that have the potential to damage the property. You have a little bit more opportunity to manage your property effectively. And an off-market deal. Now, off-market deal is huge, and we'll get into this a little bit later if it translates into the money. I have not reviewed this property yet, but off-market deal means you didn't have to pay realtors. Now, why is that important? Well, let's say that you buy a property for, let me just bring this over. Let's say you buy a property for $300,000. Generally, you're going to pay 6% in realtor fees. So let's do a 0.06. That means you saved $18,000 on the acquisition of this property. With real estate, there's a couple of ways to make money. One of the best ways to make money is buy it at a discount and then maintain it and manage it appropriately. If you can save $18,000 on the buy side of this property, you've effectively made $18,000 when you sell it, because those are commissions you did not have to pay. The return strategy on this particular property is long-term rental. There's long-term, mid-term, and short-term generally in the residential real estate side, and this one is a long-term, meaning you're going to put tenants in there typically for a year plus, and you're going to hold it for generally 5 to 10 years in this type of a company strategy. They like the high stable cash yield, and they believe this market has a high growth potential. Atlanta is one of the markets that people are talking about should be a high growth market. Unfortunately, you can never really know what's going to happen with real estate. Markets come and go and things change. That gives you a good detail, a good summary about this home. And it talks about it being 3-bed, 2.5 bath, built in 2020, high ceilings, spacious and welcoming, 3 large bedrooms, and I'm just summarizing here. But this is all information that's good to know, and it gives you location data where you can then go look on Zillow, see what properties are trading for or selling for, see what the market looks like, see what the rental market's doing. This is the kind of research that you need to be doing on your own if you're putting money into this. Something that I really like about this is it does give you the school information. School information is very important if you're renting to families because they want their kids to be in good schools. And when you look at the schools here, it gives you the ratings of 4 out of 10, 4 out of 10, and 3 out of 10, not very good. That means the schools are not highly rated in this market. What that generally leads to is lower occupancy rates because you have people moving in and moving out. In some markets, in the Seattle market, for example, in my experience, some of the schools were not well rated, but because housing is hard to come by, people get in and they kind of stay in. So you'll want to look independently and see how these schools are rated on different sites. But this to me would be a minor red flag because families are going to want their kids to be in better schools. If the rental price is lower, significantly lower than other areas, this may not matter because people sometimes have to make financial decisions as well as school decisions. So again, as you're doing your research, this is one of the factors to look at. This is something that I really do like that ARK does, is it gives you a lot of transparency on the trading history. And in this particular case, it shows you that it's trading at $25 a share, but it also shows you over the last 7 days, 1 month, 3 months, 6 months, and 1 year, and this is the 1 year time frame, how this property is traded. And you can see that it started at $20 a share in July of 2023, or at least a year ago, it was there. And then over the course of time, the property value has actually gone up. So in this particular case, it's gone up to $31 a share, ranged 30, back down now to about 25, but you still, people who invested back here in the 2023 time frame have made $5 per share. Not too bad. And then it shows you what the bid order, what people are bidding and asking for individual shares that are trading. So that's pretty good information if you're actually interested in buying this property, because you can see where it's been. It tells you that they're planning on holding this somewhere between 3 to 8 years. That is a wide range, obviously, but the reason is you want to sell when the market is favorable. So right now interest rates are high. I wouldn't want to be selling a property because it's been driving values down, because as the interest rates increase, the property values come down because the payment differential. Now, real estate generally has trended higher over the course of years, but obviously there have been periods where property values have dipped. So keep that in mind when you're looking at this, that they'll probably hold this property for 3 to 8 years, then sell it and distribute the money to the shareholders. When you're trading this property does have a minimum holding period of 3 months. So if you buy a share, you'll be locked up for at least 3 months before you'll be able to sell it on the market. Now, of course, you can always hold it to term. When you hold it to term, when they sell the property, of course, you'll get all the money back that the property sale generates. The current rental status is something also that I really do like about ARK, as they show this right up front, is the current status as well as the projected status over the next 12 months. And in this particular case, they have a 12-month lease. It looks like they must have just leased it, and they expect occupancy for the next 12 months to be 100%. Some of the other ones I've seen, it actually does show the occupancy dipping. Historical returns on this property, they say that they are distributing 3.8% annual distributions, and then they graph it out. And they show that they have paid 8 cents per share in a few of the initial months, and then they show it's dropped down to 7. Then they show down here it's dropped down to 4. And generally, when you see this number here, the $469.54 that was distributed, that's usually because there were other expenses on the property. When you have any rental property, if you have not invested in real estate before, there's always going to be expenses. There could be repairs to fencing, plumbing, electrical, whatever it is. Tenants can damage things, and that has to come out of the rent. So in this particular case, they're showing that there was a dip, and they're anticipating that going back up, where you can see it starting to go back up from a low of 487, 469 to 500 or 656. So keep that in mind when you're investing, is it's not always cash flow. It's not always pure cash flow. There's expenses built in. Some months you may even go negative. Sometimes you have to do major renovations to properties, and hopefully they're keeping a good cash reserve in this type of a property. Here they're showing the historical property appreciation using the Zillow Valley Home Index. They have seen this property go from around $33,000 in 2015 to $148,000 in 2023. They're expecting a 20.7% growth over or historical growth on properties. Now, what does this mean for you? Well, who knows, because property appreciation skyrocketed during the last few years. Some people expect it to hold steady for the next few years. Some markets will probably go negative as the home building really boomed. And usually after a boom, you have a slowdown period, and we're not forecasting a bust, but there will probably be some markets that do that. Now here's something kind of cool. They have a return simulator on Ark7's site. This will tell you that if you put in, for example, $5,000, and then you can adjust these sliders. So keep in mind, these are defaults, but you can adjust the sliders to say, well, I'm going to hold it for 8 years, and I expect a 3.8% annual distribution. I'm not sure that I'd go with a 13.7% property appreciation, but you can adjust where you think it would be. Let's just take it to 10%, or as close as we can get to 10% on the slider. Then that would show you that you're estimated to get 7.63% per year total return. I mean, that's not terrible. It's not great, but it's a good way to look at this. Now, you may look at this also and say, well, I think that the appreciation is going to go to 17%, and obviously that drives your number here. Or I only want to hold on to my shares for 4 years, and it starts to weigh the details. But it gives you a good way to simulate what you think the market's going to do and where your returns are going to come in. All right, let's scroll back down on this. So the other things that it does give you after the return simulator is it shows you the overall market. It shows you how close you are to different things. It'll give you coffee shops, retail, just little details about the market that you're in general. A little description about the market here. Average sales price per foot, and I'm assuming this is the market as a whole. And when I talk about the market as a whole, I'm looking at this Jonesboro, Georgia, which is a suburb of Atlanta. It also will come in median days on the market for home sales. This is good data for you to have. You can see if the market's increasing or decreasing. Number of homes sold, it tells you that's 97, which is a -3 or a decline from the same time last year. Then it gives you an operating statement on this particular property. This is the information that you're going to need. So for example, it tells you here you have $1,500 in rent, and then you have expenses. You have utilities, repairs and maintenance, property taxes, property management, and other operating expenses. So something I want to take a look at real quick is if we're talking about property management at $374, well, $374 divided by 1,500 tells me that they're charging 24% in property management. That doesn't seem right. Typical property management would be 10% or 8%, depending on the property manager that you have. And if you have a lot of properties, you would expect that to be even lower. So a question that I would immediately want to ask is, why am I paying $374 a month in property management when I should be paying no more than $150? That seems high. So details that we need to be figuring out, that would absolutely be one of them. Other operating expenses, $72 or $62 for a total net income of $665, or I'm sorry, a net operating income, yeah, $665 for that month. Now, what could affect property management? Well, maybe there were some additional repairs that they had to coordinate, and as a coordination for the repairs, sometimes property management will charge you money for that. Property taxes, there's nothing you could do there. Repairs and maintenance, $16. That seems ridiculously low, so that could be something very basic. Utilities, generally utilities are paid by the tenant in single-family home styles. However, this did appear to be more of a townhome, so that could be something that you pay as like HOA dues, that maybe that's where they're categorizing it. But this property now, I'm seeing that I have some questions, and the largest question I have is this one right here. Why is property management paying $374 or 25% of the rent? That doesn't seem right. Hopping into this a little bit further, and we're not going to jump into these details, but you do have visibility to the operating agreement. The operating agreement is how the LLC, which holds this property, functions. This tells you who has authority to do what, how the property should be managed, all of those details. Certificate of organization is an organization generally of the LLC. Asset management agreement, this talks about how the asset itself, the property, is managed, and it'll give you the details on what that should look like. That may even include details on the property management fee and why it's as high as it is. The certificate of registered sales, I believe that is the investment strategy that talks about the how the property's broken out, how the shares are handled. Operating agreement talks about how the LLC operates, and the series designation is the structure, or talks about the structure of the investment itself. And then you can hop into the offering circular. And again, this is an SEC document. It's going to give you a lot of information that you probably should read and go through and try to understand, but it's something we do not have time to go over in this short video. So if you decide that this is something you want to do, it gives you the ability to come in and to put in the number of shares, enter the amount you want to pay for each share. So as it's talking about, the $25 level is where the last share traded, and it tells you that there is a current bid of $22.50 and a current ask. This is what someone is willing to sell their shares for at $23. You could put in $23 right here and probably buy up to 13 shares right away, or you can bid lower and hope that they come down in their price. And if you're not in a hurry, that's not a bad option to do. So that is just how one of the properties looks here, and that is in the Marketplace tab. Once you do have shares that you have purchased, you can click on the Portfolio tab. You can see I don't have a ton in here, but I have bought 3 particular properties. All of these are either short-term or mid-term rentals, and the reason I like those is they generally have a higher cash distribution. And for example, Chicago C4 is the most recent one that I did purchase shares in. And what I liked about this one is it was a newly renovated property in the Chicago market. And walking through some of the details, some of the highlights, it is anticipating a 6.11% cash distribution on it. That's the annualized cash distribution, but it does pay it out monthly. It was closer, it's in a more urban environment. Schools were highly rated, and even though this is a midterm rental, I still like keeping properties that are in a highly rated area simply because they typically have higher values. As this is a midterm rental, they are anticipating some occupancy dips, and I do like how they show that here, even though this is a forecast. We're sitting here in July right now of 2024. They anticipate that because it has a 6-month rent, there will be a period where they go down to they're anticipating 65% occupancy, which in a single unit is difficult to get because you are either occupied or not. Now, what they're probably anticipating is a short gap between occupants. So if they have a 10-day period out of 30 days, that would give you a 60% occupancy. So that's probably what they're anticipating here, and they have historically had a 80% occupancy in this type of a property. So again, 6.11% cash distribution. They have, it looks like, held to that fairly well. They do anticipate properties appreciating slower at 3.49% in this market, and that's okay. Let's go down here to the initial offering, and this is something that you do want to look at in any investment. The purchase price of this property was $208,000. However, the offering price was $264,000. There are significant costs in this type of an investment, some of which you would not have in normal real estate. So, for example, they bought the property for $208,000. There were $34,000 in closing costs and offering costs, as well as a 3% sourcing fee, and then improvements in cash reserves. Now, I like having cash reserves. I'm not sure exactly what percent that is, unfortunately, but that's information that should be available in the income or in the information packet that they have down here below, the documents. So in here you do have that 6% real estate fees, which shouldn't be in this property. That should have been the seller paid document or seller paid costs. So you do have to be aware that there are costs that go into this. Now, some of the costs that they have to pay are the costs that go to creating an investment package, to hiring the attorneys that are able to put this in an SEC offering, so that it can go out to investors. You can see in this it talks about their financing costs, which there shouldn't be financing costs once they purchase the property because they have sold this to investors and didn't use any financing on this particular one. But you have property transfer taxes, inspection fees, escrow fees. All of those do go into it. And a lot of this goes into different ways that they are making this property available. So just understand, though, that on a standard market transaction, this property sold for $208,000. If you were to turn around and resell it, you're not going to be able to sell it for $264,000 unless you do hold this for a number of years or you do significant improvements to it that increase the value. So the reason that I bought this is because I'm looking at that cash distribution, I'm looking at someone else managing it, and to see if this return, if they hit the number, they should be hitting somewhere in the neighborhood of 9 to 10% annualized returns at the end of the period. And if they hit that, I'll be okay with it. So coming back into other pieces of this, the homepage is just some general information. It shows you the portfolio that you have. As you can see, I only started investing in this platform in May, and so far I've put a few $100s in. I have not really seen how they pay out over time, other than I have had one of my properties pay dividends on time on the monthly basis. What I do appreciate so far about Ark is they've done what they say they're going to do. The properties are occupied, they are performing. The distributions that were owed have been paid. There haven't been any surprises on that front, and they do have multiple options that we've been able to invest in. The shares do sell quickly. That's important to me because it looks like they're actually generating enough traffic that their properties are not going to go stagnant. When a property comes available, it sells to investors. I've seen that happen with Arrived also, and I've seen another platform called Landa languish, where the properties don't sell out. The shares sit for years at a time, and that's of concern to me. With Ark, the properties come on the market and they have sold, which means they're delivering a quality product. They are marketing to people in a way that people want to buy those properties. To me, that so far has been a good thing. So my overall review of Ark is I like their transparency. I like the information that they've provided. The buying of properties has been seamless. Being able to get the distributions has worked, and I've been able to reinvest those in additional shares. So far, I like this platform, and I would invest in it again. I cannot give any information as far as how they work long term because I haven't been doing this that long, and I will try to follow up with another video once we're in a couple of years. But if this is a platform that you like, if you do your research, it's something that I have enjoyed being able to look at. It's not something I'm going to be replacing my overall investment strategy with by any means, simply because there are significant additional costs that are built into buying a property with Ark because they have to put the offering out. They have to do a lot of additional work on these properties, and that generates cost that reduces the profits overall. But for a place to put some money initially, it seems to be decent. The returns seem to be decent. They're not phenomenal, but it's worth taking a look at if this is the type of investment that you are interested in. I hope this video has been helpful. If you would like to, please do like this video. If you like this type of content, consider subscribing. And if you know someone who is looking for this type of information, please do share this video. Thanks for being here. We'll see you on the next one.